Cathie Wood and Ark Invest buying the dip. The investor is using the current market reset to add over 24 of her current positions, including more investments in Amazon and Tesla. Just to run through a couple more. So the Ark Innovation ETF, that is ticker ARKK. You can see that on your screen right now, up a little over 3% today, but purchasing Amazon, AMD, and Roku. Now, a fintech-focused fund of the firm Ark Investment Management also added Reddit and Meta. That is according to some tabulations that are put out by the firm on a daily basis. And these purchases happened at the beginning of the week. So that is interesting and indicative of Wood's firm kind of buying the dip when it was at its strongest earlier in the week on Monday here. And it's interesting, though, to compare and just give a little bit of size and scope, because we know that Ark is down more than 20% this year. Some 75% of its value has been wiped off since the peak in early 2021. So it is interesting that we continue to monitor this ETF as much as we do, but the street loves to look at Cathie Wood's investment moves as potentially an indicator of something to come.
Yeah, exactly. And I think she's going in buying the dip in a lot of these tech favorites, or some of them have been tech favorites in the past when you take a look at Amazon and also that recent run up that we had seen in Tesla before the recent pressure. Not necessarily a huge surprise, but again, many people are closely tracking Cathie Wood, given her track record over the past several years, some of the success that she has had. But it is important to say that her Ark had hit the lowest level of the year here going into that. A lot of that due to the broader pressure that we've seen across the markets here. But again, Cathie Wood seeing a reason to buy some of these names, and Amazon, I believe, adding that to 3 of her funds. So again, seeing real opportunity there on the heels of some of the pullback that we have seen in Amazon stock.
Cathie Wood, head of Ark Investment Management, has once again stirred the stew of the stock market with her latest audacious maneuver. Amidst a stormy tech sector, she shelled out $59 million on some of the market's most beleaguered tech stocks. What could be driving her, you ask? Well, the answer lies in her long-standing philosophy and her uncanny ability to see opportunities where others see red flags. Wood, famous for her visionary investment acumen, or reckless bets, depending on whom you ask, has been a polarizing figure on Wall Street. Is she the Warren Buffett of our times, or just a manager riding high on temporary fame? Just as 2020 launched her into the Investor Hall of Fame, 2024 seems to be testing her mettle. Her flagship Ark Innovation ETF has already sunk 21% year-to-date, but that hasn't deterred her. If anything, it's emboldened her to dig deeper into the tech sector. The market's been less than kind, particularly to young tech stocks that have seen meteoric rises followed by equally dramatic falls. A confluence of factors from faltering AI hype to disappointing earnings reports has contributed to the fall. But where everyone else sees danger, Cathie Wood sees gold. She's doubled down on prominent names like Amazon, Roku, Coinbase, and Robinhood, suggesting she's sticking to her guns about technology reshaping the future. So let's dig deeper in Cathie's takes. But before we do that, if you want to keep up with the latest updates of the stock market and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. That said, back to today's video.
Here to give us his thoughts on this week's market and how he's advising his clients, we've got Matt Powers, Powers Advisory Group Managing Partner here. Matt, great to have you on here with us today. So let's just make some sense, first of all, of what we've seen over the course of this week.
Yeah, it's been interesting. Thanks for having me on. Good morning. You know, we had a record high and got to a record high in the middle of last month, and some rotation away from tech. And primarily there's a few reasons. I mean, I think we all know this, but it's certainly an overly concentrated market and the rotation away from mega cap growth stocks. But yeah, the yen, the carry trade, and then weaker than expected jobs data all fed into kind of a crazy choppy week that we just had.
A crazy choppy week, but it didn't seem like investors were, even though there was a massive sell-off that permeated over into Monday from prior week and Thursday and Friday's trading activity, it seemed like, based on our conversations with strategists and a few CEOs of some major trading platforms, that investors might have run out of some positions, but ran back in to other ones where they could find some deals as well. What were you seeing on that front?
Yeah, absolutely. You know, it's interesting. The downturn left very few holdings, very few names untouched, but investors definitely retreated to some of the safe havens, which your traditional utilities, REITs, and defensive sectors. But the bounce back Tuesday and then clearly yesterday made this look a little bit less of a huge across the board loss and more to come and more just a typical sell off.
In the tactical game of stock investing, Cathie Wood isn't playing checkers. She's playing 3D chess. The market's recent antics have handed the NASDAQ Composite Index a 10% drop since July 10th, fueled by a temporary cooling off in artificial intelligence excitement, lukewarm corporate earnings, and overarching economic jitters. There's never a dull moment in the tech sector. It swings like a pendulum on a caffeine binge. Usually, when stocks plummet, investors scurry away like mice from a sinking ship. But not Cathie Wood. She's that one who charges straight into the storm, seemingly with a smirk and a shopping cart. Listening to the investment community chatter about Cathie is like eavesdropping on a lively debate. On one side, you have her ardent followers, affectionately dubbing her Mama Cathie, hailing her as the tech world's messiah. On the other, critics are grumbling, questioning whether she's a visionary or simply lucky, a Warren Buffett in a smart blazer, or just a manager with a string of fortunate decisions. Let's not forget her rock and roll year of 2020, where her Ark Innovation ETF returned an astronomical 153%. She was the undisputed darling of the investment world. But in the stock market's game of what have you done for me lately, her recent numbers don't look so radiant. So let's go through them in detail. Hello everyone and welcome back to Investocracy.
Yeah, it sounded like you were about to hit this, but take us into your investment philosophy then with that activity that we had seen and the retreat into some of those safe havens.
Yeah, so we're primarily dividend growth focused. So we're looking at companies that pay a history of a growing dividend, and typically we're really looking at a strong entry point into these companies. And we've told our clients, that doesn't mean that we're excluding the tech trade and the mega cap companies, but mega cap tech side, the Mag 7. But a lot of our clients have been zeroed so heavily into those that we're trying to shift here just a little bit and refocus. And our advice really has been don't overreact to market volatility. Especially don't completely sell off some of the affected areas, but start looking more opportunistic, start looking at some of the unloved, unappreciated areas of the market, specifically defensive sectors, small caps, et cetera. And if you're a dividend growth investor, clearly you've had to be patient at least over the past 18 months. But now we see is the time to overweight in those areas.
Wood's flagship Ark Innovation ETF commands $5.3 billion in assets, but has shown negative returns, down 8% annualized over the past 12 months, 30% for 3 years, and a paltry 1% for 5 years. In stark contrast, the S&P 500 raked in positive annualized returns, 20% for 1 year, 8% for 3 years, and a robust 14% for 5 years. If this were a sports league, Ark's performance would be riddled with injuries and a losing streak, playing catch-up to the S&P 500's championship run. According to Morningstar, the Warsaw of investment research, investing in Ark's choice of young, unprofitable companies is akin to gambling. Analyst Robbie Greengold stated, results range from tremendous to horrendous. Morningstar's criticisms, however, didn't stop Wood from sticking to her disruptive technologies game plan. With her, it's all about future potential, technological metamorphoses that will allegedly change the world. Cathie's recent splurge is a testament to her conviction. Just this week, she chalked up substantial deals on major tech stocks. First one is Amazon. Positioned as both a retail colossus and tech behemoth, Amazon has had its share of market love and scorn. Adding Amazon into Ark's portfolio signifies Wood's unwavering belief in its innovation and market dominance. Amid a more tech-stagnant period, she's banking on Amazon's resilience and consistent reinvention to drive up value. Second one is Roku. Wood's acquisition of 249,039 Roku shares, valued at $13.8 million, doesn't just involve shuffling assets. This shift marks total confidence in Roku's role within the digital streaming revolution. Even with a staggering 15% drop since July 17th, Wood evidently sees in Roku a potential phoenix rising from its tech ashes. Morningstar's Matthew Dolgan called Roku's earnings as encouraging as it could be, pointing to growing usership and engagement, alongside sustained positive free cash flow and adjusted EBITDA. Third one is Coinbase Global, adding 117,617 shares of Coinbase, worth $22.6 million. Wood's investments underscore long-term optimism. Even though the stocks plummeted 26% since late July amid cryptocurrency volatility, she didn't shy away. Coinbase's revenue may be a roller coaster, doubling from last year but down by 13% from the first quarter. Yet, Cryptoville's mayor remains bullish on staying ahead in this digital frontier. Fourth one, Robinhood markets. Lastly, Ark gobbled up 1.29 million Robinhood shares, valuing $22.9 million. Despite Robinhood's recent 27% drop since mid-July, Wood's unfazed, perhaps due to their 40% net revenue increase and stellar jump in net income. Clearly, Cathie Wood considers Robinhood a valuable draft pick in her tech MVP team, foreseeing their fintech broadened scope as a noteworthy game changer. Wood's strategies face sharp scrutiny. Morningstar's not her sole detractor. Analysts argue that Ark's penchant for young, profit-slim companies demands exceptional forecasting talent, hinting that such prowess may not be Ark's strong suit. Despite Morningstar's skeptical stance, Wood remains unyielding. She argues her approach transcends traditional style boxes and focuses on groundbreaking technologies, artificial intelligence, blockchain, DNA sequencing, energy storage, and robotics. For her, it's about future-transforming innovations, frequently dismissed by habit-clad critics and analysts. Even as her flagship Ark Innovation ETF shed $2.3 billion over the past 12 months and dropped by 12% within just the last 15 days, Wood's steely resolve hasn't wavered. It's this commitment to disruptive technologies that continues to fascinate or frustrate followers and critics alike. So what does that mean to you as an investor? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
With that in mind, are there, in addition to sectors, specific outperformers that you would be tracking within those sectors?
Yeah, so I'll just give you a few sectors that we're looking at, and some that we've overweighted, but consumer staples, and they're traditional defensive, but consumer staples, healthcare, utilities, REITs, and yeah, not exciting. None of those sectors are typically exciting, but we're in this situation where there's some tailwinds that are back with regards to dividend growth, and you can shift your investment strategy a little more towards holdings that are more conservative, and you've got, again, the tailwinds of potential rate cuts here in September. So in the consumer staples area, Mondelez, everyone knows Ritz, Oreo, Chips Ahoy, Wheat Thins, Triscuit, on and on. They're number one in biscuits, number two in chocolate, number three in pastries and snack bars. But the thing that's striking with them is right now you'd lock in a once in a decade high in their dividend yield. Q2, they actually just increased their dividend payouts 11%. So, if you're a dividend investor, that's one we certainly would look at. If you go into healthcare, Eli Lilly, which if we had this conversation Wednesday, it looks a little bit different. They had their earnings report. Both Zepbound and Mounjaro just crushed sales estimates, and they beat their earnings, they beat their revenue numbers, and they increased guidance. So Lilly's been on a tear, but we've been steadily adding to that since the drop in mid to early July.
Interesting. Yeah, one of the larger earnings moves that we've seen over the course of this period here. Matt Powers, who is Powers Advisory Group Managing Partner. Matt, good to grab some time with you. Thanks so much.
Yeah, appreciate it. Thanks for having me on.
Definitely.
Cathie Wood's $59 million splurge may seem high risk, but it underscores her long-term faith in tech stocks reshaping our future. Indeed, the market's roller coaster ride could be unnerving. However, if anyone's showing up to this market mixer with moves ready, it's Cathie Wood. Her acquisitions amidst this tech shakedown reiterate her resolve in betting on innovation, even when the chips fall elsewhere. Currently, Ark Innovation ETF's performance might seem lackluster compared to benchmarks like the S&P 500. Yet, Wood remains undeterred, her recent purchases reinforcing her forward-thinking approach. Analysts may remain skeptical, but Wood's track record of high-stakes investments and transformative tech bets presents a compelling narrative for investors willing to embrace short-term volatility for long-term gain. The current landscape shows figures that may alarm some: Ark's recent negative returns and stock volatility of companies like Amazon, Roku, Coinbase, and Robinhood. However, the underlying belief in technological revolutions remains firm. Wood's conviction and strategy might appear audacious, but they're intricately backed with data and a visionary perspective on emergent technologies. So, what do you think? Are Cathie Wood's bold moves merely a trifling bet, or is she steering Ark's ship towards uncharted, prosperous tech waters? Drop your thoughts and let's stir up the discourse around the future of tech investments and visionary investing. As the market ebbs and flows, it's undeniably intriguing to keep an eye on Cathie Wood's game plan. Whether she's seen as a genius or a gambler may depend on which one of her long-term tech bets hits the transformative jackpot. One thing's for sure, she's definitely making the stock market a thrilling spectacle. If you would like to know what the stock market has been up to these past few days, go ahead and click on the next video on your screen. See you there.